Okay, good. We're rolling. We're on. Okay.
What's this about?
I was just thinking the same thing. What are we doing?
We're doing what again?
Hey guys, Abby Johnson here with Matterhorn Business Development. Right here is Greg Winteregg, our CEO and author of Fun at Work.
That's me.
Also happens to be my father, just a coincidence. So this is the next in our Profit First / Startup series. So what we're going to be talking about today is more on Profit First and what bank accounts you should have. If you haven't watched the Profit First summary video, we're going to link that up here. You don't have to watch it to understand what we're going to be talking about, but I highly suggest that you watch it after this.
It's not that long.
Yeah. So you should have at least 5 core accounts for your business. These can be expanded upon, but we're going to go over these 5 accounts and how to utilize them.
Yes.
So account number 1 is your income account.
Which everybody has.
The problem though is most people just have one account and all the money goes in and all the money goes out from one account. So the difference here is the income account is just for income. All money goes into that one account and you're going to transfer to your other accounts from this account.
Right. So the way it generally works is all the money goes into the income account and then you pay for your supplies, you pay your subcontractors, you pay your employees, you expand your company, and then there's $3 left for you.
Right. Okay, so the next account number 2, is your profit account. This is very important for Profit First principles. You are taking your profit first. So you have your income account, and when you're doing allocations, the first thing that comes out is your profit.
And let's talk about the allocations just for a second. Because what Mike Michalowicz recommends is the 10th and the 25th. So you let the money accumulate in the income account, and then you have these other 4 accounts that we're going to describe here. But then on the 10th, you transfer the money. On the 25th, you transfer the money, and bills are going to be one of these accounts. But then the bills will be paid on the 15th and the 1st. So that profit account is the first money transfer that you make.
Right.
And depending on the income of the company and your position in the company, the profit can be 5%, 10%, 20%, depending on many other variables. But right now, you should start today with at least taking 1%.
Yes, no matter where you are, no matter if you're just starting out, no matter if you're in the hole and you're in debt, just start setting aside the 1%.
1%. You can run the company on 1% less. Anybody can. Now here's the other important concept, and I don't want to make this too detailed. You have your profit account in this bank, and with online transfers today, it's so easy to say, oh, I'm a little short. Let's just steal the money from the profit account. What you're going to do is you're going to go to a separate bank, and you're going to open up another profit account. And as soon as the money is transferred into the profit account at your main bank, you're going to immediately make a transfer into the other bank. And we know it usually takes 2 or 3 days to get there, but then that money is just sucked out, it's gone. But at the second bank, you have to make this money hard to get. You do not want checks, you do not want a debit card, you do not want to have some easy way. You want to have to get in your car and drive to that bank and have to get a cashier's check to get your money. And you're really going to have to think as you're making this drive over there. So we want to take this profit, we want to put it here really fast today, transfer it today, and then it's sitting over there like in a vault, in a safe. Armed guards.
Exactly. So next account number 3 is owner's pay. And first thing...
I just did 2.
Well, it's account number 3. That's okay.
So next account, I'll do 3.
Okay, so account number 3 is owner's pay. And I know a lot of people are going to say, well, I'm already on the payroll, so why do I need my own account? It's very important that you're setting aside that money for yourself. It's almost a mental effect of seeing that money has been taken for you.
Yep.
So if you're on payroll, if you're on salary, then when it comes time to do payroll, you just transfer from owner's pay into whatever account payroll is coming out of. But it's important that you are allocating for yourself as the owner.
Something we're running into more commonly than I could have ever imagined is owners are like, well, if I do that with me, I won't be able to pay my staff. I'm like, well, wait a minute. Your staff are making more than you? It's common. Staff are getting paid and the owner is making nothing. We're working with somebody who went 4 months, 4.5 months without a paycheck.
Right.
With a very high payroll.
Right.
And eight other people are getting paid and the owner is making nothing. So
right.
the second account that you're going to transfer the money into is your pay.
Right. You need to value yourself.
Yep.
If you weren't there, the business wouldn't be running.
Yep.
So if you're having trouble paying your staff, you need to maybe evaluate if you're overstaffed.
Exactly. Okay, so now we're ready for account number 4.
Account number 4 is the tax account. I'm talking income tax, not sales tax. That's a different thing. And the point of this account is so that the owner's taxes and the company's taxes at the end of the year are covered. I know a lot of owners who are scrambling with big tax bills at the end of the year. They've already, even the taxes have already been taken out of their pay, but they still owe $9,000 for the corporation or the company. Where is that money coming from?
Also, the other cool thing that Mike talks about in the book, let's say that you're on a W-2 and the taxes are just coming out and you're fine at the end of the year, but you know, your spouse is saying, what? We just spent $20,000 in taxes. Wouldn't it be nice to say, hey, sweetie, here's $20,000.
Right.
You pay yourself back.
Right.
So what actually is happening, and I love this about this system, as a W-2 employee, the money is going out, but wouldn't it be nice to get it back? Wouldn't it be nice if the company really was paying for your taxes? So that's why the tax account is that next allocation account.
Yeah.
So then you're actually getting your money back and you feel okay about paying your taxes because your fee structure, your volume, everything within the company is actually covering your taxes. So then you don't really care.
Exactly.
I love it.
Yep.
All right. So now, account number 5.
So account number 5, aren't we cute, is operating expenses. So now that you've funneled out this other money, what you're left with is what you're going to operate your business on. That is why it's profit first. You're taking out this money going towards yourself first. Now, obviously, if you can't pay your staff by doing that, then you need to, there's other things, and we should make a separate video about that. I'm not talking about paying yourself and not paying your staff.
Right.
But the point is that when you're left with this money, you're gonna figure out, you're gonna be more innovative. Instead of being like, wow, look at all the money in this account, I'm gonna, you know, go buy some new computers and whatever, you're gonna say, okay, I need a new computer, but I only have $400 instead of $1,000.
Yeah.
Well, my buddy makes custom computers, and maybe I can barter with him. And you start thinking of ways to be more cost effective.
And I don't want to make this comment. So doing it the old way with income minus expenses equals profit. There's this little drip left. The employees are making more than the owner, and you're at home trying to figure out how in the world am I going to run my house with this? You figure it out because that's all you have left.
Yep.
Let's reverse the sequence.
Yep.
So the income comes and then the profit comes, and now you're sitting here with this little bit and like, how am I going to run this company? You're getting creative at home trying to figure out how to, you know, ramen noodles and peanut butter and jelly.
Canceling subscriptions, borrowing someone else's Netflix account.
Whatever.
You can do that for your business too.
Yeah, do it for the business. So it's like you're getting creative on living on a budget at home with your profit. Let's switch the sequence.
Yeah.
And then when the staff know we only have this much, then they're going to have to figure it out.
Yeah.
That's where the creativity comes in. And quite honestly, if you have a bowl of money this big, you can kind of be sloppy and waste it. And like you say, $1,000 computer versus putting some creativity into a $400 computer. So if you have this bowl of money that's much smaller, everybody sitting around in the company is going to have to figure out, oh, how are we going to run the company on this?
Yep.
And this does not mean that staff are underpaid, overworked, none of that. In here, I talk about bonus systems. Everybody should be rewarded, games, and just make it a game. How are we going to run the company on this?
Yep.
So you're doing this anyway, except you're doing it with what's left, this little drip that you get left. Start making everybody in the company figure out how to run the company with a smaller pool of money.
Exactly.
It's just a change of philosophy, a change of thinking.
Okay, so now those are the 5 basic accounts. You can always have more accounts beyond this if you have to pay sales tax. It's really good to have a sales tax account that you just put that percentage into, because that is not your money, that's the government's money. I personally like having a separate payroll account because of payroll taxes. So don't be afraid to open more accounts. Don't be afraid to have 5. Your banker might look at you weird, but it doesn't matter. There are banks that can accommodate for this kind of system. Credit unions are great. They have no fees usually. So don't be afraid to open more if you need more.
And I just want to make this comment. I've done this for a very long time. In your initial knee-jerk reaction, oh, I can't keep track of that many bank accounts. But listen, there's your income account, and you make your profit disbursement, your owner's pay disbursement, your tax disbursement, and your operating expenses. So this one income account has 4 transactions, and then the profit is distributed quarterly. The owner's pay is weekly. The taxes are quarterly, usually. And so it's not that hard. So don't get overwhelmed like, oh, well, can't keep track of one account now. This is a very, very simple system to keep track of.
Right.
Yep.
So if you need some help with this or have questions, comment below. Our contact information is below. Please make sure you subscribe, hit the bell so you don't miss anything. We have 3 videos a week out. Make sure you watch the rest of our startup series, and
buy the book.
Buy the book.
funatworkthebook.com.
Yes.
And just one last comment.
Yes.
We are certified Profit First professionals. We've been trained by Mike Michalowicz's staff. So we understand how this whole thing works. If you need some help, let us know.
Yep. See you next time.